Bitcoin is fundamentally a humanitarian movement exposing the greatest con in human history, central banking. That is the view of my next guest. Robert Breedlove is a freedom maximalist, ex-hedge fund manager, and philosopher in the Bitcoin space. He is the host of the What is Money podcast and the founder and CEO of Bitcoin consulting firm Parallax Digital. Robert, good to have you back with us here on Kitco.
Thank you, Michelle. I'm glad to be back.
All right. Well, Robert, you have spent hours and hours analyzing and discussing the origins of money with some of the brightest minds of our times in your What is Money podcast. You go very, very in depth now. I've listened to many of those podcasts. We had a very snowy weekend here in New York, which gave me ample time to really delve into it, and I highly recommend them. But we don't have hours on this particular show. I did, however, want to give Kitco viewers a bit of a crash course in some of the fundamental philosophies you explore, the Cliff Notes version, if you will. So I would like to take this time and unpack some of the points that you made that really resonated with me. And I want to start off with inflation, because last time you were on the show, we discussed the unprecedented stimulus, and you warned that contrary to what Fed Chair Jerome Powell was saying, this will not be transitory inflation. As we know, we now have inflation at a 4-decade high. Even the Fed's preferred inflation gauge, the Personal Consumption Expenditures Index, is showing that prices are climbing at the fastest pace since 1982. And you explain that inflation is in fact theft and that money printing is legalized counterfeiting. So let's start with you breaking that concept down for us.
Sure. So I think inflation is a very muddied term to begin with. People often refer to it typically in terms of price inflation because that's what we experience in our day-to-day life. But when I use the term inflation, I'm specifically referring to the arbitrary expansion of a fiat currency supply within the protections of a legal monopoly. So what I think is a useful analogy here is if you consider that a stock certificate for a company, right, is a title to a share of that company. So you could say that it's a title to the capital that company represents. So each share certificate is basically a claim on an equity interest in the company. The company is just an assemblage of capital. Money is sort of similar in that it is basically a title to global capital in a way that you can use money to effectively as a call option on any form of capital in the world, right? Money can be used to obtain anything. Another way to think about that, as I've laid out in some of my work, is that because human time is the major, you could say time or energy is the number one or primary input to every economic process that creates anything of value. And money can be used to obtain anything of value. You could effectively say that money is a title to human time or energy as well. So if you have any experience investing or running a private company, you know intuitively and obviously that you would never issue a certain class of stock or shares in that company that could issue new shares to itself and externalize the dilution onto another share class. So you had class A that could print itself new shares, but not be diluted and basically just externalize the dilution to class B, for instance. If that were the situation on a company cap table, the class A shareholders would just dilute the class B shareholders to zero, right? They just print themselves new shares until they own the whole company. That's obviously insane. No one would ever sign up to own shares in a company that were class B because you effectively have no ownership interest. Yet that dynamic is exactly how the current legacy financial monetary system works. There is one group of shareholders in the monetary system that can print themselves new shares in the form of expanded fiat currency supply. They can then dole out that issuance at their own political whim, discretion, arbitrariness, and effectively externalize all the cost of that new monetary issuance onto users of the currency. That's inflation in a nutshell. It's if you consider again currency as title to capital in the world. If there's one group that can produce new titles to that capital and then externalize the dilution, it's a pretty unfair, unjust, insidious arrangement. So I've referred to this actual phrase became very popular when you say that inflation is legalized counterfeiting, counterfeiting is criminalized inflation. It's the same thing, right? So George Floyd, for instance, I think he was originally attacked by the law for having a counterfeit $20 bill, if I recall correctly. I think that was his original crime. That's a crime, right? Because he's not a licensed counterfeiter. Yet that is the exact same operation that the Federal Reserve perpetrates by the trillion and does it legally in broad daylight. They even hold meetings about it and tell us they're going to do it. And my presumption here is that it's just a generalized ignorance of how money works, that people tolerate this and we discuss it openly that, oh, what is Jerome Powell going to do next week? Is that good or bad for the economy? Debating as if there were some difference, but in all cases where you're preserving an industry through legal monopoly under the threat of force, if someone else tries to become a competitor in that space, it's always bad. It's always bad for the market because you now have systemized, uninsurable theft being perpetrated against all market actors. You can't, like, if it was just roadside criminality and someone's, attacking you on the side of the road and taking some of your stuff every now and then, you could actually insure against that. You could have insurance for your business to offset some of those losses and give you back to business. But because inflation is systematic and effectively uninsurable before Bitcoin, it dampens the ability for markets to create wealth in the world. So it's like central banking is shackling the economic potential of humanity, in my opinion. And Bitcoin is very important in that respect, in that it liberates us.
All right, before we get into Bitcoin and why Bitcoin is the potential answer to all of this, I want to focus more on fiat currency. And one of the points that you mentioned is how the very definition of fiat currency is a challenge to self-sovereignty, that fiat by definition is by decree. As defined by the dictionary, fiat means an official order given by someone who has power, an order that must be followed, a command or act of will that creates something, an authoritative or arbitrary order. So fiat currency literally means because I said so. So expand on how that is in fact an affront to self-sovereignty.
Sure. So if we just define sovereignty again, it's a word that people traditionally associate today with nation states. It's like, is it a sovereign or a non-sovereign, right? Is the money, people even refer to Bitcoin as non-sovereign money, which I think is a mistake. Sovereignty is not given. It's the authority to act as one sees fit. This is not something that's given to us from government. It's not like humans emerged in the world and there were governments and all of a sudden governments decided to give us freedom and rights and all of these things. That's not how it worked. Humans emerged in the world as individuals, and we assembled our powers and faculties to create social institutions like government. So the sovereignty itself actually, in my opinion, adheres within the individual. So this is something that we give to social institutions, right? In the case of government, we all agree via social contract to say, we're not going to perpetrate violence against one another. Let's give all of the authority to perpetrate violence to a monopoly that will then preserve peace if there's any disputes amongst us. So it's not, people get this backwards sometimes. They think that government grants you rights, and that's not at all the case. To get to fiat, the original term fiat actually came from fiat lux, which was the original decree when God said, let there be light. Regardless of your religious affiliation, like that's where the term came from. And so your definition of it is correct. When humans try to perpetrate fiat onto another, it's literally how you handle your children, right? You say, go clean your room, son or daughter, because I said so, right? And if you have kids, like this is hard for your child to tolerate. And there's better ways to say it actually than say, because I said so. It's, you kind of tell them what's going on and, why they should clean their room, et cetera, et cetera. But if you carry that over to adult on adult interaction, I mean, no one likes that. No one likes to be told what to do. We're all freely autonomous, individual thinking, self-sovereign people. So I think this entire idea of trying to organize human affairs because someone said so, because an authority said so, and behind that, by the way, is the threat of force.
Well, yeah, I was going to say an authority with military might more often than not. Yeah,
exactly. So it's a practice of fear. Honestly, it's like someone's putting, the proverbial or literal gun to your head, saying, "Do this, or else." And the or else could be legal penalty, could be physical, etc. But this idea of organizing human beings under the threat of force, again, it's hard enough for kids to accept that from their parents. I tweeted this out earlier. I think it's unacceptable for adults to accept that from other adults in the form of government. And it creates all these negative externalities, which are almost intuitive. Like if you're just a tyrant in your household and you just stomp around telling your wife or significant other or kids to just do whatever you say because you said so, that's going to create some backlash over time, right? Anytime you're not looking, they're going to try to undercut you or subvert you or betray you, whatever. It's just not, you don't have reciprocal human interaction. So it's not sustainable human interaction. We know this at the micro level. General view is that at the macro level, it doesn't work either. And if you look historically, what's happened every time governments get deeper into this fiat game of more authority, more force, more control, more censorship, people abdicate and people defect, they leave, they separate. And then typically the society upheld by that government force fails. So I think the only way we can have sustainable human interaction is through purely mutual voluntary exchange, which is totally absent of fiat.
And of course, that would then put forward the case of Bitcoin, which is backed by peer-to-peer consensus. But before we get into Bitcoin, I want to break down a little bit more about the idea of the central bank. You've said that it is antithetical to the idea of property, that central banks essentially violate the property of some to enhance those of others. And if you could expand on that, but perhaps starting off with the history and the origin of the central bank on Jekyll Island, because I found that to be a particularly profound point when you look at the history and the genesis of central banks and how it links to your bigger thesis.
Yeah, so the genesis of the Federal Reserve was on a small island off the southern coast of Georgia called Jekyll Island. My introduction to this was the excellent book by G. Edward Griffin, The Creature from Jekyll Island. It's a long read, but it's packed with information. There's an abridged version titled Dishonest Money by, I think, Joseph Plummer, that's a little bit shorter. But essentially, and I should say too, the Federal Reserve is not the original central bank. It's the latest implementation. It's the dominant implementation still today. But we've had central banking going back to, I want to say it's the 1600s in Antwerp, where they started this model of centralizing the custody of what was then money, gold, into a single institution and then issuing banknotes redeemable for gold. This, as I've touched on a lot in the show, was really just human beings working around a technological shortcoming of gold itself. And that gold was just very limited in terms of its portability. It's a heavy, dense physical metal. If you're going to transact in gold with any high frequency, the physicality of gold inhibits our ability to do that. So we essentially figured out, hey, there's economies of scale by just centralizing custody of this metal, issuing paper redeemable in gold. And now we can all transact in this paper at a much higher frequency with much greater ease and convenience, but still have this call option to gold itself. So the central bank was introduced as a mechanism to scale gold, is my general view. The problem with that, of course, comes in that when you have physical gold, you don't necessarily need to trust anyone. You have what's called a bearer asset. So in accounting, we know that assets equal liabilities plus equity. Well, if I hold physical gold, I have 100% equity. It's a bearer asset. It's in my possession. I don't need any body, like any institution, to authorize me to spend that gold, to decree the value of this gold, et cetera. So physical gold carries with it 0% counterparty risk is another way to think about it, or 0% liability. But once you warehouse that gold and you put it in a central location, and then that institution, the warehouse or the bank, issues you an IOU for the gold, what was traditionally called a warehouse receipt, what we call today banknotes. These were just basically tokens for gold is all they were.
Right.
You've now converted that bearer asset that's 100% equity, 0% liability into something that has a liability attached to it. Because if you go to redeem that gold with your warehouse receipt or banknote and they say, we don't have it, or we've suspended withdrawals, or any number of things, that's when that liability gets realized. So the problem with scaling gold via the central bank is that we introduce the need to trust human beings with the integrity of our money supply. And that's when things come off the rails. Every time we trust people, like we try to trust human nature with securing the most important, most valuable asset in the world, which is money, it becomes corrupt, right? The institution itself becomes corrupt.
It's a very negative outlook on human nature there, Robert, but go ahead.
Well, you just...
You're not
Lord
necessarily
Acton,
wrong.
right?
Yeah.
Absolute power corrupts absolutely. So if you give someone absolute control over money, and money is the most powerful tool in the world, you can only imagine what types of behaviors it draws out of people over time.
And to that point, you've said that the monetary standard and moral standards are inextricably linked. So unpack that one for us.
Yeah, so this is a very interesting angle. It's been written about in a great book titled Honest Money by Gary North. I lifted his example of the winemaker, which I put in my piece, Masters and Slaves of Money. And that's kind of a longer, nuanced example. I would encourage the audience to go read. But if we just want to look at something simple, we could talk about money's impact on time preference. This is a term that the Austrians use a lot. It's a little bit counterintuitive because the higher your time preference, the shorter term thinking you are. The lower your time preference, the longer term thinking you are. So one of the aspects of incentive related to money is that if your money is depreciating rapidly, as fiat currency does, you are directly financially incentivized to think shorter term. You want to get out of cash savings and into any other asset just to protect your purchasing power. Because if you just hold cash, if you hold US dollars, for instance, you're getting significantly debased in the medium to long term. Whereas if you have something more like physical gold or Bitcoin, a money that no one can arbitrarily debase, you can now accumulate purchasing power safely without counterparty risk, such that you can have a much longer time horizon for planning and thinking and considering life. And that turns out to be directly related to morality. Because if you're a long-term thinking, right? If I'm just a caveman
Right.
and we have no capital accumulated and I'm just trying to get my next meal, I'm much more likely to just use the club to club anyone over the head to take their meal or their shelter or whatever. But if I'm a long-term thinking person, I live in civilization, there's a lot of capital stocks, I'm trading with people, I'm much more likely to value something, a virtue like honesty, for instance. Right? I'm not thinking about just my pure short-term immediate gain. I'm considering my life, my trading relationships, my reputation on a much larger and longer time scale. So you could say that as we consider broader scope of time, our morality actually increases in tandem.
So why is Bitcoin the answer here? As you've called it the most certain form of money that we've ever had, how does Bitcoin solve some of these issues?
Yeah, so this is a problem. This is an age-old problem, right? We've been trying to bootstrap ourselves out of economic scarcity or depravity for as long as we've been around. Only in the past few hundred years, though, did we really figure out capitalism, this idea of trading with one another that is this positive sum game that increases wealth for everyone. And the results have been absolutely spectacular. Most of human history, we've had a large subset of the population that's just starving all the time. Yet now we have food surpluses worldwide. Even people in or near poverty don't often suffer from starvation for reasons other than political reasons. There's political reasons that cause starvation still, but for purely market-driven reasons, starvation is almost gone. And that's a byproduct of capitalism itself, that we figured out how to trade with one another, to exist interdependently in a way that increases aggregate wealth, which means it's the tide that rises all ships. We're all more wealthy as a result of capitalism. And this idea of, beneath all of this really was the idea of being able to hold your purchasing power or savings across time. That's how you build a business. That's how you execute on entrepreneurship itself. You have to have some basis for storing the fruits of your labor. So you go into the market, you take risk, you attempt to satisfy the wants of consumers in a profitable way. If you succeed, you need a place to keep your winnings that's insulated from the risk of the market, right? That's what gold was. Gold was this mechanism for capturing the residual purchasing power that the economy was generating in a form that was maximally resistant to the opinions of others. So if you're holding physical gold historically, like, you don't care what any central bank does, what any nation state does, there's no policy that affects you effectively. And so we could say gold kind of was the basis of capitalism, but it was also the disciplinary force on government. So if a government wanted to print more money to do, execute things A, B, and C, historically gold would flow out of their country. So gold provided this check, this financial check on government overreach, overspending, oppression. Anytime a government was not acting satisfactorily for people could take their gold, leave their country, go to another one. That was the international gold standard. But in the 20th century, we moved into this period of globalized warfare. And this had a real perverse effect, because now any country that wanted to maximally fund the war effort, they could go off of the gold standard, go onto a fiat standard, or even a partial, like a fractional reserve banking standard. They could now inflate the money supply to effectively harvest the savings of their society to fund the war effort. So instead of being limited to their own balance sheet or their own war chest, they can now tap into the savings of the entire society. So what this did was created a game theoretic pressure on other countries to do the same. Like if I'm the US and I'm going to war with Germany, for instance, Germany goes onto a fiat standard. Yeah. They've just increased their war chest 100x or 1000x, whatever the number is. If I'm the US and I'm just funding the war effort with, wartime bonds and direct tax revenues, if I'm not inflating my currency supply, then I'm going to be going to war with an opponent that's much better heeled than I am. So once the consequence of this is that the worst country ends up kind of setting the bar for the rest of the countries on a fiat standard. So there was this coordinated effort to get off gold in the 20th century for these reasons. Like, it restrained the options available to government. And we could say that it succeeded. Post World War II, we still had this gold standard where the US dollar would be pegged to gold. All the other currencies would be pegged to the dollar. And this gave the US the ability to sit on top of the global geopolitical hierarchy, where we could export our inflation, or we could export freshly printed dollars, right, and import goods and services. But of course, that broke down as well, right? By 1971, we were, I think, 6-to-1 leveraged in terms of US dollars per unit of gold held, such that Nixon broke the gold peg. And now here we are, 50 years later, into a global fiat experiment.
So then why is Bitcoin the answer, as you say? Why is Bitcoin, as you called it, the one asset in the world that no one can control? Because I want to put forward some challenges to that argument, because Bitcoin can be seized, it can be taxed, therefore controlled, it can be regulated, it can be outlawed. We still need exchanges and wallets to allow us to use the blockchain, and those are subject to control. So what would you say to that? Why do you have so much conviction in this idea that it's Bitcoin that's the ultimate answer here and that Bitcoin cannot be controlled?
Yeah, so back to the emergence of gold, when we had to centralize it because it was physical. So the only way to scale gold in terms of transaction throughput for a globalizing society was via the central bank. And that is because gold is physical. So that's the attack vector on gold effectively. There's another element here too, that because gold is physical, you can violently confiscate gold, right? When Germany, I think when they invaded Poland, the first place they went was the central bank, right? They go straight to the central bank, raid their gold. Bitcoin's different in that it doesn't, because it's dematerialized and honestly perfected the economic properties that we seek in money. We don't need to centrally custody Bitcoin to scale it for the world. And that really makes all the difference. So the fact that people have an option to take physical delivery of Bitcoin, which is to say you can take possession of your own private keys anytime, anywhere, 24/7, without anyone's permission. This is the option that citizens need to hold government and other institutions in check. This is what we called, under the gold standard, this is called convertibility. So when you could go to the bank and convert your banknote or your warehouse receipt into gold, you could have effectively cast a vote of no confidence on the bank or on the government or whatever. You just say, I don't trust what's going on here. I don't trust the individuals involved or the institutions involved. I want to take possession of this bearer asset gold such that I have no counterparty risk with any of these people or institutions that I don't trust. The problem is they always suspend convertibility. Once anything gets hairy, that's the first thing you suspend to basically put banks onto this fiat standard. With Bitcoin, it's much harder to stop convertibility. And convertibility is not even necessary if you're not using a centralized custodian. If you're using a self-custody model or a multi-signature custody model, you don't need convertibility at all. You have full sovereignty over your money, which forces institutions to be more accountable to the preferences of their customers.
All right, Robert, I certainly hear that point, and I definitely hear the point of the need to keep governments and institutions in check with the idea of convertibility. No argument there. But just to play devil's advocate here, I'd like to challenge this concept that you put out there that Bitcoin is the one asset in the world that no one can control. Because we are seeing how governments are trying to control Bitcoin. India, for example, recently saying that all cryptocurrencies will be taxed at 30%. So it can be taxed, it can be regulated, so subject to control there. We don't know, it can even be outlawed, it can be seized. And we still need certain infrastructure that's out of our control to exchange Bitcoin. We need exchanges, we need wallets. So even if you have your own key, you still need the internet infrastructure and you still need electricity. So there's this big macro system that may be out of your control that's needed to support Bitcoin. So how would you challenge that argument?
Yeah, I would say that you certainly can't. There is no inhibition on what laws can be passed against Bitcoin. Or you can tax it at 100%. You can outlaw it. You can do anything you want. If you're a jurisdiction, you can pass any type of law you want. My counter to that, though, is you can also pass a law that outlaws gravity or physics or thermodynamics.
Can you, though? Can you outlaw gravity?
Of course you can. Doesn't mean it's enforceable.
All right.
But it's not, you can pass whatever law you want. You can say whatever you want.
Okay.
Bitcoin's sort of similar. Governments are very effective at regulating centralized institutions, which is why Bitcoin was architected to be decentralized. And they can, I think, slow down the progress of Bitcoin. You can hurt Bitcoin businesses. You can push Bitcoin business offshore into other friendlier jurisdictions and whatnot. But the key point here is that no matter what you do legally, no matter what opinion you render or enforce via fiat, you'll never change the consensus rules of Bitcoin. You'll never change the fact that there's a certain block size it's created at an average once every 10 minutes, a block of transactions, and it adheres to a supply cap of 21 million. There's no decree, there's no law, there's no regulation that can change any of that. So ultimately, what's that old saying? Like, there's something about like liars have to censor, whereas truth persuades. Bitcoin is just kind of the truth of money that's persuading people to use it. It's incentivizing people to use it. There's no enforcement mechanism for Bitcoin. There's no one's putting a gun to your head, proverbial or literal, and telling you to use Bitcoin. It's completely completely according to the self-interest of the market actor involved.
All right, so what happens if those self-interests are challenged to such a degree that people lose faith in the system? If it is consensus-based, which it is, what happens if authorities make it so challenging, costly, difficult to own Bitcoin that it's no longer seen as beneficial by the peers in the peer-to-peer system? So what happens when people lose faith in Bitcoin or say, you know what, it's just not worth my while to own Bitcoin because of severe external pressures?
Well, I mean, the question really cuts both ways. You could say, all right, there's one version of the world where all the governments wake up and say, you know what, this fiat experiment was crazy. We need to go back to a hard money standard. We need fixed money supplies. Let's all be fiscally responsible. We're going to need a ton of austerity to shake off all this debt. Let's all do that. And we're all coordinated and we're all, walking the line. There's another version of the world that I think is much more likely, is that governments are a business, right? They want to grow, and to grow, they need to expand revenues. And for governments, revenues are taxation, inflation and taxation. Inflation is another form of taxation. So what we see historically and what we see sort of rationalistically looking at the business model of government is that it needs to expand taxation and inflation over time to grow as a business. If that is the path that the world continues to go down, that is the path we're going down today, then that's just creating more and more demand for unstoppable, uninflatable, unconfiscatable money. Now, your point's taken too, that you said Bitcoin has been seized, can be seized. Of course it can. So can physical gold, right? Anything that a human can possess can in theory be seized. But with Bitcoin, we do have these very interesting ultra high security custody schemas that are not possible with any other asset. I mentioned multi-sig earlier. I think multi-sig is it's the best of both worlds. You get self-sovereignty over your asset, but you also get redundancy such that you're not a single point of failure. We call this the $5 wrench attack in Bitcoin. Someone breaks into your house with a $5 wrench and beats you over the head until you give them your private key. Then you don't need to worry about all these high-tech, technical attack vectors. It's just a very simple one. But with multi-sig, you can basically chop that single key into 3, 5, 7 pieces, distribute it secretly and geographically such that you're immune even to a $5 wrench attack. So
I like the specificity of the $5 wrench, by the way.
Yes. Well, due to inflation, it may be a $10 wrench today.
But several people having custody over your key makes it less likely for it to be seized, is the point that you're making here. So, Robert, I always bring it down to this. Is there any existential threat that, should it happen, you would be like, you know what? Turns out I was wrong about this whole Bitcoin thing.
Yeah. So one last thing because one of the point you made, I wanted to touch on the multi-sig thing too. We've all seen the movies where they want to launch the nuke and they all need to, 2 or 3 people need to put their key in and turn at the same time. That's multi-sig basically. So you've distributed the trust such that you've lessened corruption. The other point you made too is, Bitcoin's dependent on the internet and electricity. That's true. Like, you don't need perpetual uptime of the internet. It's not just like a single internet blackout will stop Bitcoin, but it's a good analogous question to ask yourself. Is it possible to turn off the internet everywhere worldwide forever? Because that's sort of the analogous question of how you could really stop Bitcoin. You'd actually it'd take a really hard hit everywhere persistently forever. But there is this implicit, you're making a bet effectively on the perpetuity of internet and grids to at least some extent in the world when you're betting on Bitcoin. And that's a key point. So I'm glad you brought that up.
Okay, so is there something that you do identify as an existential threat to Bitcoin? Is there something that could ultimately make you change your views on Bitcoin?
Yeah, so we talk about this a lot in Bitcoin circles. Because, Bitcoiners are very adversarial thinking. That's kind of in the ethos of the cypherpunk tradition. What's funny about it, though, is you ask yourself this question and you research and you study for thousands of hours, and the best answer we've come up with so far is a black swan event. There's just something which by definition is an unknown, right? I can't even tell you what it would be because then it wouldn't be a black swan. This could be something in the protocol layer. We could break elliptic curve cryptography. There could be some cosmological event, maybe that did an electromagnetic pulse and wiped out everything electronic in the world for a long period of time. All of these things are real threats. The number one known unknown is, in my opinion, just the response of the state. How hard are they going to come down on this thing? We saw Executive Order 6102 back in the 30s, where they outlawed the private ownership of gold. That was done under threat of imprisonment and fine, but the actual enforcement tended to be focused on centralized custodians. So they weren't going door to door and telling people to give them gold. They were just going to where people custodied their gold and confiscating it. All of these enforcement measures are much more difficult on a Bitcoin standard. I mean, you just can't, you can actually just put Bitcoin on your brain and go anywhere in the world, right? If you're holding it in multi-sig, as we touched on earlier, can't be confiscated forcibly. You have plausible deniability. So what would cause me to change the tune that I'm singing about Bitcoin? It would have to be the realization of some type of black swan that just radically depressed the hash rate. The hash rate is, how much energy and capital is being allocated towards Bitcoin production and security, which I would expect that to be reflected in price. And, I don't know, it would take a heck of a beating because right now Bitcoin is far and away the most secure computing network in human history. We saw China outlaw Bitcoin mining a few months ago. The hash rate took a huge drop, 40%, and it's since over its original high point where it was before the China mining ban. So Bitcoin mining has proven itself to be extremely formless in a way, it's an amorphous target because if you try to clamp down on these mining operations, these are just modular miners, right? They just get boxed up, shipped to another jurisdiction and plugged back in. That's exactly what we saw with the China mining ban. So if the largest, most violent and centralized police state in the world can't stop Bitcoin mining, I'm not confident any other government can.
All right. Well, let's focus on the approach that governments go the other way. And you, as well as several other Bitcoin maximalists, have been saying that Bitcoin will truly take off when a leading central bank buys Bitcoin, that will start a chain reaction, game theory, FOMO of other central banks. Break down that scenario for us and who you think may be the first leading central bank that could make this move and why.
Yeah, so the calculus is pretty straightforward. And we see this a lot in private business as well, is if you're a large established enterprise and your business model is being threatened by some technological disruption or some new competitor, there's a number of ways to respond. But if the competitor is small enough, the easiest way to respond is to just buy equity or buy equity in the competitor or buy the competitor outright. And we see, a lot of companies do this today. There's, internet companies do this. Facebook's done a lot of this. They bought Instagram, they bought WhatsApp, et cetera. So if you're a central bank and you determine that any of this Bitcoin thesis is even marginally possible, like even just 1% chance, for instance, of Bitcoin succeeding in the way that Bitcoin maximalists envision it, then the calculus for a central bank is quite straightforward. It's like, okay, there's a 1 in 100 chance of this thing destroying my business model. What can I do to hedge myself? What can I do to hedge my business model against its success? And a very straightforward, pragmatic answer would be just allocate 1% of your assets into Bitcoin as an insurance policy against its success. So this doesn't require central banks, having some ideological flip about Bitcoin or deciding it's important, or they can completely hate it and despise it on every level. But as just a cold, hard matter of business, just numbers, just math, that there's a very likely scenario, in my opinion, that a central bank decides to start buying this, if nothing else, than as an insurance policy against its success, which is really interesting. And so the game theory comes in when you say, okay, central bank A does this calculation. Maybe they assumed it's a 1% or even a 0.1% chance of success, Bitcoin's chance of success. Well, now when they start buying Bitcoin and that information becomes public or at least known to another central bank B is now running the same calculus, but their chance for Bitcoin success is slightly higher because the market cap will be slightly higher. Another central bank is holding a position in this asset. So maybe it goes from 0.1% to 0.2% chance of success. Well, that becomes reflected in how much Bitcoin that central bank B actually buys. And then so on to central bank C. Central bank C's, central bank A and B bought Bitcoin. They're running the same calculus, but the chance for Bitcoin succeeding is slightly higher. And therefore, the disruptive effect to their business model is slightly higher. So they'd allocate slightly more assets. And this cycle, what I would say is a virtuous cycle from a central banker's perspective, they'd probably say is a vicious cycle,
right,
is what we call hyper-Bitcoinization. This is the same pursuit of Darwinian economic self-interest at the individual level, exists at the corporate level, exists at the social institution level, which includes nation states and central banks. So that's Bitcoin in a nutshell. It's this vortex of incentives.
We've seen El Salvador implement this. Mm-hmm. The government of El Salvador buying Bitcoin, issuing Bitcoin, making Bitcoin legal tender. Mm-hmm. And yet, so far, that trend hasn't caught on. Is that because El Salvador is just too small a player in the global scheme of things?
Well, they are an extremely small player. My understanding, too, is they're more focused on the legal tender aspects and implementing this Bitcoin. I think they're calling it a tax-free city. I may be saying that wrong, but effectively, there's no taxes other than a flat 10% sales tax in this jurisdiction that El Salvador is putting together. That's very attractive, right, to entrepreneurship. So I think the play they're making there is to draw in a lot of talent, capital, brain power.
Yeah.
Also adding Bitcoin as legal tender. And then the president has been buying some Bitcoin. He's been tweeting about that. I don't know that that's their central bank doing the buying. I'm not sure of the details on that. But to answer your question, yeah, they're very small. It's very new. I think they only announced this originally less than a year ago.
September of last year.
Yeah, so it's very recent. We are seeing the IMF demonize El Salvador for this, which is interesting because just think this through. If the IMF actually thought there was some risk of Bitcoin, destabilizing El Salvador or whatever, they would just let it play out. And then El Salvador would come begging the IMF for a loan or some form of liquidity to foster and support their economy. But they're not doing that. They're demonizing Bitcoin and attacking it because they're scared of it. They're scared of how successful it could be and how, in my opinion, this could just rip off the veil of all the BS that gets perpetrated at the IMF and World Bank level.
Well, the IMF is positioning it as a systemic threat, that it's concerned for the welfare of El Salvador, that it's going to tank the economy. The IMF also saying that because there's been increased correlation between stock markets and crypto markets, that together they pose a systemic threat. But I hear your point that perhaps the intentions of the IMF are not that honorable. But circling back to if a big central bank buys Bitcoins, what happens if, for argument's sake, the Fed buys Bitcoins? They can print money to buy up as many Bitcoins as they want. and then potentially manipulate Bitcoin, given it is a threat to the Fed's money printing monopoly. I mean, you mentioned gold a lot. We've discussed gold today a lot. That has been the one true value asset for thousands of years. Yet people believe that gold price is artificially suppressed and manipulated largely because of it being held by central banks. So would a central bank like the Fed buying Bitcoin, having the capacity to print as much money as is needed to buy Bitcoin, make Bitcoin more susceptible to manipulation? What's your take there?
Yeah, I want to touch on one last thing on the last point, that the IMF saying that it's for our safety, right? That they're trying to protect El Salvador or others associated with the Bitcoin project there. They're doing it to protect us for our safety. I would just like to highlight over the past 24 months, if we haven't learned anything about these messages that are for our safety, that is quite the red flag for BS, in my opinion.
Not going to disagree with you there, Robert.
In regard to the Fed buying Bitcoin, you touched on something interesting here, again, from the game theoretic standpoint, in that if you're a legal monopolist in currency production, the decision to buy Bitcoin is what we would call bounded downside and unlimited upside, right? You are producing something that costs you nothing, right? You can produce, the Fed can produce currency at effectively zero cost, and they can acquire things of actual value, right? Things that have actual scarcity. And they do this already, right? We buy equities, they buy corporate debt, real estate, special purpose vehicles, et cetera. So the decision for a central bank to buy Bitcoin is very asymmetrically in their favor, right? You can trade something that you can produce ad infinitum to acquire something that's strictly finite. So it's a very, if you could, trying to think of some example, if you had, if you lived on the beach and you could trade sand for diamonds, you would do that deal all day. Now, this does get interesting though, where, okay, let's say the Fed, they've run this calculus, they've decided to buy some Bitcoin. Doesn't this then enable them to manipulate the price more? Because as you touched on earlier, gold price has been manipulated systemically for decades and decades. You can look at, on this topic, GATA.org, GATA.org is the Gold Antitrust Task Force. There's a whole history there of information about gold price manipulation.
Well, again, it's a theory. It hasn't necessarily been validated, but there are a lot of people that are concerned that the gold price has been manipulated and that a similar phenomenon could happen with Bitcoin. Yes.
I would say do your own homework on it. Sure, you got to check the facts and read what's out there. But there's a book titled Gold Wars by Ferdinand Lips you could look at if you're into this. You could also look into the London Gold Pool was another mechanism used, ostensibly used to do some gold price manipulation. The thing with that, though, is that so central banks today hold about 20% of the global gold supply. So that's the first thing that's necessary to heavily influence the price in the marketplace is you need a large position in the underlying. The second aspect of it is that because, again, back to the lack of gold's portability, very expensive and difficult to settle with finality. So a lot of paper gold gets traded. I'm not sure the ratio of this. I want to say it's like 50 to 1, like 50 to 1 paper gold traded over physical gold.
Yeah.
The larger that ratio, the more games can be played in the derivatives market, which are all the paper gold instruments. And if no one's settling with finality, if no one's taking custody or delivery of a physical gold, well, that game can go on forever, right? You can just keep whatever the paper market says, whoever's pushing the paper around actually gets to dictate the price, especially if they own a large position in the underlying. As we said, central banks hold 20%. So with Bitcoin, there's a different set of circumstances because central banks don't have anywhere near 20% of the underlying. And again, Bitcoin is relative to gold, it's hyper portable. So anyone can take physical delivery of Bitcoin at any time within an hour, 24/7. So I think the combination of these two factors drastically reduces the central bank's ability to play games in the market for Bitcoin. But that's not to say it's not being done. It will be done. It probably is being done right now, I would guess. But the moral of the story would be that the games are not as sustainable as they are in the market for gold, given the different monetary characteristics of Bitcoin and the lack of position in the underlying.
I take you at all of those points, especially as you say with blockchain, and that's so much easier to verify transactions, which can get lost on the futures market. Which brings me to 2 points. Firstly, I want to focus on this idea that central banks currently do not own, well, leading central banks don't own any Bitcoin and would need at least 20% of the world's Bitcoin to be able to manipulate it. But again, if the Fed can print as much money as it wants, it can pretty quickly swallow up a huge chunk of the Bitcoins in the market, could it not?
Well, yeah, that's where the holders come in. There's some people like myself. I mean, I never intend to sell Bitcoin at any price, because the other thing is, okay, so let's play that out. The Fed wants to buy 20% of Bitcoin supply, right? So they're trying to gather, if we say there's 17 million Bitcoin total, there's 4 million lost or whatever, that's 3.4 million Bitcoin that the Fed would be trying to acquire. You'd want to do that quietly if you're a central bank, first of all, because if you do, again, if you announce that, or that becomes public knowledge, you're now going to be bidding against every other central bank in the world. Like they'll be trying to outbid you. And then even if you do it quietly to inject, to acquire 20% of the outstanding Bitcoin supply, you're going to increase market cap by at least an order of magnitude. I would say at least one order of magnitude. So we're talking about a 10x on Bitcoin, because even though there's say 17 million Bitcoin in existence, not lost coins, I think the actual Bitcoin that trades is less than 4 million. So you'll be, the Fed would be effectively trying to buy up all the Bitcoin that trades in the world. I mean, what would that do to the price and market cap of Bitcoin? I think it's safe to say it would do at least a 10x. And then you're running that calculus again. Like, okay, if I think this thing has a 1% chance of success at a sub $1 trillion market cap, I'm the Fed, I go in to try and take a position of say 20% in the market. To get there, I 10x the market cap. Well, does that mean then the chances of Bitcoin success are now 10x in my calculus? Because if so, I need to buy even more Bitcoin, and so does every other central bank. So there seems to be this kind of unavoidable incentive trap with Bitcoin. It's like you just can't ignore it. If you're an economic actor, individual company or nation state, and you seek to preserve or increase economic value across time through trade, then you have an incentive to always hold the money that's immune to everyone else's opinion. And that's at essence what Bitcoin is.
Again, just to continue playing devil's advocate here, you couldn't see a scenario of a pump and dump, the Fed acquiring all of this Bitcoin, granted it goes up during that process, and then dumping it in order to devalue it in the long run.
Well, dump it where though? Because if the Fed's producing all these new dollars to acquire Bitcoin, that's creating a lot of inflationary pressure on the dollar itself. And then what, they're going to dump the Bitcoin back into dollars? I'm sure you can play a lot of games in that respect, but I think we're already near a critical threshold in terms of both Bitcoin's existence. It's been around 13 years, and its size. I think the real dominoes start to fall when we hit a $5 trillion market cap, and we're close now. We're sub 1 trillion. Well, we're quite sub 1 trillion now, but we've been close to 1 trillion. So I think within 5-7 years, we're going to be at that critical threshold, where Bitcoin starts to bend the world to its will. This is not the government. The game of government has been flipped, and that's what hasn't been realized. People still are parading out here thinking they can change the tides of history with a policy or a regulation or a law or an economic forum or whatever. They think a small group of people's opinions can shape the world. And I think Bitcoin just throws that entire dynamic on its head. People just haven't awakened to it yet.
Do you see a point where we no longer denominate Bitcoin in dollars? where
Of course. Yeah.
Bitcoin's value is relative to itself, and that things are then ultimately denominated in Bitcoin.
Absolutely. When we denominate the world effectively in US dollars today, there is this centripetal network effect with money where we tend towards one. That's what the gold standard was, right? There were economic incentives that drove people to adopt one money, the hardest money. That same dynamic holds for Bitcoin. And my opinion, I have a public statement about this, that I think the US dollar will be hyperinflated by the year 2035. So in that time, when the US dollar is hyperinflating, the price of Bitcoin in US dollar terms is going to be going astronomical, right? 1, 5, 10 million. At some point, though, it just loses all meaning. The dollar itself loses meaning. And you could see, go look at Venezuela today, right? They had the best performing stock market past couple of years in nominal terms because their currency's hyperinflating. But what does that mean? It means nothing, because in that same time they have the best performing stock market in the world in nominal terms, they have Venezuelan bolivars clogging the gutters and streets because the cash is meaningless, right? The scarcity has been totally compromised. So there's no market value. I think that's the path Bitcoin goes. I think ultimately the US dollar hyperinflates. It'll be painfully obvious in the Bitcoin price that this is occurring. And then at some point, you just have to reprice your life. You start pricing yourself in sats. You start denominating trades in sats. And if you have conviction in this thesis, you're trying to do it now. Like, I personally denominate my own net worth position in sats. I've joked, I said, if it doesn't make sats, then it doesn't make sense. Like, why would I do anything else in the world, start any business, if it's not generating positive cash flow in Bitcoin terms? I could just hold Bitcoin and take a vacation. So,
well, and you say that you buy Bitcoin or sats every single day.
I do.
Is there a level that the Bitcoin price breaks, a resistance level that it breaks, that would have you a little bit worried?
The most shaken I've ever been was in March 2020, actually. And it wasn't, the Bitcoin price, I think, definitely has an effect on you. But my broader concern was that the world was just going to have some type of Spanish flu event. This was back when COVID was announced in March 2020. And then I thought that perhaps we'd just have bigger fish to fry than money for a while. But turns out, COVID's just a flu, and it's been used as an excuse to do everything, and then some at the state level. So no, there's not a price point, I think, that particularly would shake me out of my Bitcoin position. Honestly, at this point, I'm like so skin and soul in the game that I think I'm just riding this thing all the way, no matter where it goes. But it's a strange perception, because I may sound like some type of cultist or something saying that, but I actually feel very pragmatic in my position. Like,
you're not diversified at all. You don't.
No, I have some interest in a few other businesses that I've just accumulated over time that aren't liquid necessarily, but my liquid net worth, my liquid savings, I keep in Bitcoin. And at this point in history where people are tripping over themselves to impose their opinion onto one another, and politics has become such an emphasis in our individual and collective identity, I think the smartest move imaginable is to hold the money that is completely immune to all those opinions, immune to all the politics. And to your point about certainty earlier, it's like, the world, it's pretty evident the world's becoming increasingly uncertain amid all this nonsense, this post-COVID regulatory mass psychosis. Bitcoin, like fixed money at 21 million, works 24/7. It's been doing exactly what it said it would do, what Satoshi said it would do perfectly for 13 years. Like, it's the most certain asset in the world, in my opinion. Like, the uncertainty of Bitcoin is like that it's only 13 years old. But if you limit your view to its life, it's the most certain asset we've ever had. So I feel a great deal of peace of mind holding the most certain asset the world's ever had amid conditions of the greatest uncertainty. I've seen in my lifetime, at least.
All right. Well, when you were here last, you did predict Bitcoin at 307,000 by the end of 2021. In fact, you said by October of 2021. Now, again, I applaud you for giving us a target. I applaud anyone that comes on this show and actually sticks their neck out and gives a forecast. So what happened? Why didn't we get $307,000 per Bitcoin by October of last year?
Well, I can't answer what happened exactly. And it's especially difficult when you put time to these things, because that really throws things for a loop. But I can walk you through my thinking, and what got me to that point was, and I just tweeted this out today too. In December 2019, I put out a price prediction that said Bitcoin would hit 20,000 by December 2020 and 240,000 by December 2023. The $20,000 price prediction by December 2020 was spot on. I think we exited the month at 24,000, maybe 25. And then I think it was, we recorded in May of 2020. So I think it was April of 2020. The model that I had was being outperformed by 100%. I think Bitcoin was like at 50K. The model had it at 24. The one other thing I left out here was I posted that prediction originally December 19. Post March 2020, due to the central bank response, we revised that peak price target from 240 to 307. So that was the 307 that I shared with you.
Yeah.
But the range was originally December 2021 to December 2023, that we'd hit 307,000, somewhere in that range. But when I came on your show and my model is being outperformed by 100%, I went with the shorter term price, or time prediction rather, and that was a definite miss. So, but as I'd like to say again, all models are wrong. Some are useful, most are dangerous. I hope no one's trading options on this prediction thinking that it's going to come to fruition, because none of us know, right? Anyone living by the crystal ball is bound to eat glass, but there's my logic nonetheless.
Another good saying you worked in there, Robert. I'm going to have to borrow many of these. But based on your model, it sounds like you still hold firm to the idea that we'll get 307,000 Bitcoin by the end of 2022?
2023. So my original range was December 2021 to December 2023. Because at the time when I formulated the prediction originally, the cycles were getting slightly longer. These are the Bitcoin price cycles. Where we are now, it's hard to say. We may not even have Bitcoin price cycles anymore, or maybe they've been significantly elongated. But yes, I think 307,000 before the end of December 2023 is very much in play.
And do you have a price target for the end of 2022?
I do not at this time, actually. That is the only model I've put together, and I've updated it post-COVID. And we've just been watching it to see how it does. But I do regret not laying out the details behind this on our last recording, because now people are grilling me for Bitcoin not hitting 300,000 by October of 2021.
Again, as I say, I respect any guest that comes on this show and has the fortitude to make a call that bold. And all right, so your model predicts 307,000 Bitcoin by 2023.
Sometime within the next 24 months, yes.
All right. Well, we will see how that one plays out. But again, the ideology, the thinking, the philosophy behind Bitcoin and the idea of questioning the origins of money, I think has been very fruitful regardless of where the price of Bitcoin is. So thank you for breaking that down for us.
Yes. So thank you. And thank you for letting me air it out. And I agree, actually, that the principles and fundamentals we're discussing earlier, these are much more important than the price. But the price is Bitcoin's marketing department. So we've got to respect that too.
And I respect you for joining us. And thank you again, Robert Breedlove, the host of the What is Money show, which I highly recommend. Thank you.
Thank you, Michelle.
And thank you for watching. I'm Michelle Makori, coming to you from New York. Keep it right here on Kitco.